Hi dear traders! During the week, the market sentiment has been on a roller coaster. At the beginning of the week, traders were pricing in a possibility of a less hawkish monetary policy tightening by the Fed. However, since Wednesday, they have been speculating that the US regulator will remain stuck to its aggressive stance. The change in the sentiment took place just after the publication of the US retail sales figures, which turned out to be better than expected. The report confirmed that the US economy is able to cope with another aggressive rise in the key interest rate aimed at capping inflation. In our video review, we are going to find out what events will shape the market sentiment early next week. From Monday to Wednesday, the macroeconomic calendar is not rich in events. Traders are likely to wait for the Fed's meeting results by increasing the volume of long positions on the US dollar. On Tuesday, the Canadian dollar will hardly resist the greenback. The fact is that the retail sales report for September may unveil a decline of 0.5%. Since in Canada the situation is opposite to the one in the US, traders may choose the US dollar instead of the Canadian one. Traders who prefer the Asian Pacific session will also price in more aggressive actions of central banks. Thus, the Reserve Bank of New Zealand is likely to raise the benchmark rate by 75 basis points, maintaining the same pace of the monetary policy tightening. Although inflation is still very high, stable consumption allows the regulator to continue the combat with surging prices through higher interest rates. The hawkish stance of the Reserve Bank of New Zealand is expected to support demand for the New Zealand dollar. Also on Tuesday, experts at Market Economics will disclose preliminary business activity data for the world's largest economies. Traders will mainly focus on the manufacturing and services PMI figures from Germany, the Eurozone, and the UK. According to forecasts, each indicator may show a decline. Only the US manufacturing PMI will remain in the green. However, in November, the growth pace is likely to slacken, thus sliding to the 50-point threshold that separates contraction from expansion. Meanwhile, since July, the US services PMI has been hovering below the 50-point threshold amid high inflation and expensive loans. In November, the decline may slow down, thus allowing the indicator to climb to the level of 49.3 points. The market reaction to the figures could hardly be predicted, as later this day the US Fed will announce its meeting results. Traders' reaction to the US durable goods orders could also be mixed. However, the previous report managed to surprise traders, unveiling a fast rise. Nevertheless, early next week, the market sentiment will be shaped by the expectations of the FOMC meeting minutes. Notably, at the meeting, the Federal Reserve decided to raise the key interest rate by 75 basis points and hinted about slower monetary policy tightening. However, now monetary officials are providing a lot of signals that the regulator will continue raising interest rates at the same pace. This in turn is boosting the US dollar. Nevertheless, traders still suppose that in December the benchmark rate will be hiked by 50 basis points, whereas next year the rise will total just 25 basis points. These events will be in the limelight in the first half of the next trading week. Don't miss our daily news reports to be always in touch with the latest events.